Welcome back. It's a tough morning of trade for currency, bond and equity markets. Rupee has plunged, Bank Nifty has collapsed and bond yields have gone up. 56.10, 56.11 for Nifty spot. Look at the Bank Nifty down by about 2.25% now. Ramdev Agrawal, Joint Managing Director and co-founder of Motilal Oswal Financial Services, joins us live now. Ramdev, things are just getting bad to worse now for Indian markets. Rupee has plunged. Growth has come under pressure, earnings are poor, and liquidity is no longer a tailwind.
Nothing is right, except probably monsoon, which also seems to be a little excess. So, I think it's a very pessimistic backdrop, but investing has to happen in good time as well as bad time, So, it's a challenging time, but I mean, if you want to be a little more optimistic in a slightly all over its gloom, but 3-4 sectors are clearly kind of showing way. One is all the tech. I mean, if you see the entire tech pack has done very well. One is, of course, the rupee depreciation benefit, but I think more strength they are getting from the recovery in US economy, drop in the unemployment levels there, sustained drop in unemployment levels. Because if the unemployment goes from current 7.4, 7.5 to say more like 6.5 or 6%, then you get the natural draft in the kind of demand for the Indian tech personnel big time. So that's the hope people are building up. So there could be re-rating of the entire sector, and that's the biggest story which India started with in 2000. I mean, if you talk about the first decade, it was a story led by Indian tech. They have the power to deploy a lot of young youth, and they have the power to bring that necessary forex for current account deficit. Whether it's 61, 62, 65, that only time will tell, but they have tremendous power. That's the core industry of India right now, core external facing industry. Then you have the pharma, which is another, in 2000 it was not a big force, but today it is becoming a very big force with US FDA approved plants and global marketing setup which we have created.
Ramdev, we are almost nudging 61.50 on the currency right now. So will this dichotomy last, wherein IT, select pharma, FMCG hold out and the rest of the market gets battered down?
Clearly, see, markets will go where the earnings are shaping up. I mean, markets is completely motionless in terms of, I mean, you see on the tech pack or pharma pack, there is all-time new high, history new highs. And you find almost so many stocks, I was reading the paper, which has gone below the 2008 plunge. So you have completely two sides of the market. One which is booming and one which is completely dissected. So the ones which have not managed themselves, or tailwind is completely out of the business. Two aspects. I mean, there are companies which are very well managed, but there is no tailwind in the business. Then there are businesses where there is a huge tailwind, global as well as local, and they are managed very well. So you got to get the business right as well as the management right to perform in this market. So I can see this 2, 3, 4 sectors. I mean, of course, consumer is booming still. Booming means I would not call it booming, but still holding the 10, 12, 13% kind of a growth quarter on quarter, very high level of profitability, good cash flow. So few consumer names. Then of course, you have one turnaround sector, that is telecom. And this quarter, at least one sector is on its own, it has turned around, not because of the government help or anything like that, but everybody else is so kind of out of action. All the competition has become so leveraged and powerless, that 3, 4 which are saved, now they are picking up their kind of.
So in general, you're happy because Hero Honda has recovered, Bharti is doing okay, Infosys is 3,000. The smile on your face is telling me that this is
I'm smiling because I'm sitting here. Doing with that dumb camera is very, not very exciting, particularly with this kind of markets.
Fair point. So is it time now to add Bharti and names like Infosys to your portfolio? Will the market give you that kind of headroom? If you've missed out on the rally, you could still get into it.
See, let's not discuss any individual stock because it's a very complex situation. You have to change your stand as soon as things change here. Because if it is 61, you think one way. Tomorrow, if it is 51, then another, and 71, yet another. So I think managing portfolio, managing stocks is becoming very challenging because noise level and the number of variables which are moving so rapidly is changing so fast that you have to be very careful in what you have in the portfolio and how you monitor, because we say one thing today and tomorrow realities are different. Realities are changing very rapidly.
But let's look at Bharti in specific. And you said that buy into sectors which will gain because of rupee. Bharti will lose because of rupee. They have a $10 billion loan. Now, why would anybody like to go close to a stock which has such a high debt?
Yeah, so they have two components of it. One is the local business, Indian business, which is very large, and second is their investment in Africa. So African business we don't understand, and it has not reported so far a very exciting set of numbers. But Indian business portion is doing well, and it will be, I mean, the tailwind which will build up. They are the biggest, they are the most competent, they are the most profitable also. So can that business scale up very rapidly in terms of volume and in terms of, more particularly in terms of pricing and profitability? That's the expectation. It's not a 2003 or anything like that. It's a very penetrated market, very competitive. Regulations are matured, and you cannot get away with anything in Indian market also. But still, it's a very different kind of business where successful networks are very difficult to beat. So you have an Idea, you have Vodafone, and you have Bharti. So these three have to, and fortunately for the industry, there's no fiber on the ground. So entire thing, internet revolution, entire data revolution which is the world is going through, has to happen, last mile at least has to be wireless. So the opportunity is very big for Indian companies, yet the pricing structure is such that it is very difficult to make it viable. A new player to enter in here is, so I think government is absolutely right in making it 100% FDI compliant industry, because anybody who brings global capital into this country, it will do only good to the sector, because it's not that easy to enter and make money.
Ramdev, there's been near capitulation when it comes to the banking pack, and it's pretty alarming the way these stocks have been falling. Besides asset quality concerns, what do you think the market is pricing in?
See, I think somewhere apart from, the weakness of the economy is definitely reflecting into the weakness of the banking balance sheets. But we are seeing within banking also, there is a set of so-called well-managed private sector banks, and then you have 65-70% of the economy being run by public sector banks, where bulk of the, because reporting is very honest there. So it's a very large chunk of bad loans. And this time, unfortunately, what has happened is that because the private sector banks have become bigger, a lot of chunky and good quality assets have gone to them, and little more, the quality of asset which PSUs banks have typically is looking far more worse. And this is the peak of the credit cycle. So they don't have dearth of pre-provisioning profits, but provisions credit cycle is so severe right now. So I think it is that's becoming main major weak link in the economic activity here, because your savings are not handled very well.
Right.
You know, savings land up where? I mean, either in stock exchange, insurance, or banks. So you know what's happening in stock exchange, what's happening in insurance. So the only place you can go with your financial savings is
you
banks.
missed on commodities. Look at what's happening in commodities.
So that's
you own FT. As an investor, are you disturbed what's happening to the NSCL, or this is an opportunity?
No. There's no opportunity, boss. These are all challenging times. I mean, you don't understand what has hit you. So clearly, I mean, one is trying to grapple with the situation, but it works both ways. It's exponential businesses. You buy into exponential businesses, thinking that business economics is very good. I mean, and
so for Ramdev Agrawal, the investor, the investment thesis of FT is broken. Can I understand? Can I safely assume that?
Clearly, it is. One is disappointed. I mean, I'm not making anything new, but one is disappointed. I mean, we never thought that exchanges are such a dangerous animal. So exchanges are supposed to be a safe place for the investors to go, and I think the role is even for the government to make sure that exchanges are a safe place to go for everybody. And that's why people venture in with the money coming from US, Hong Kong, Singapore. People do blindly billions and billions of dollars of investment.
Having said that, have you been given the assurance of a settlement and a payment back?
No, whatever is there in the public domain. I mean, I don't have any specific line to them to say, but I think everybody is trying to do their best in given situation. But I mean, this investors' confidence is shaken from that market. So how do you handle the investors' I mean, otherwise they'll again flock to gold. So it is going to further worsen the problem for the government.
Which is so sad. You put money in fixed deposit, you don't get returns. There are no participation in equity markets, and now investors will be pulling out of commodities.
No, see, equity markets has its own kind of rhythm. I mean, it has done 18% compounded in last 30-35 years. So I mean, it doesn't come like bonds. So it will come. I mean, I have great faith in Indian entrepreneurship, businesses, stocks in per se. But right now, will it first go down by 10% and then recover? So those are the issues. Equity market is not a problem. The problem is, that the way regulations work for every other asset class, whether it is the deposits going to the PSU banks, deposits going to the various segments. So is there a minister for savings? Because savings is a big issue in India.
I've got lots of questions for you, and there are millions who track you. In this market, where are you treasure hunting? Are you treasure hunting in the beaten down part of the market, or you're better off owning quality stocks and you're confident that these quality stocks will do well?
See, you have to buy only quality.
Okay.
And in quality also you can get beaten down stocks.
Give me an example. I'm struggling honestly from last 3 months.
I have committed myself not to talk about any stocks. Okay. Because my interpretation can be wrong, and then innocent investor might buy into it, and so it's not right for us to discuss any stocks. And but now actually I have committed myself more time for stocks investing, because there is a whole lot of stocks which are actually cheap, which you understand, and where managements are good, business are good, but right now it is suffering from whatever the size issue. It's a mid cap, it's a small cap, it's an infrastructure. So those
so you're
kind
not averse of investing in infrastructure?
No. See, if any business is good, I'm willing to invest.
Give me a hint.
No. See, that's what I said. See, if you are, and opportunities are coming in plenty,
Okay.
So long as it is not a one Nestle and one liver, and this is 15-20 names you leave aside. Apart from that, down below there is and you buy today, tomorrow it will be definitely down by 5%.
You're not sold Nestle even though it's expensive?
No. That's a 25-year holding. So we will have underperformance for next 5 years. That's fine. That's taken for granted. But you don't sell unless the business model is broken. At least I don't sell till business model is broken or management integrity is broken.
Okay.
So long as these two things are there, I typically stay invested for very long periods of time.
Okay, Ramdev, really good chatting with you. Appreciate you taking the time out. Pleasure having you in the studios as always. Just about testing the 56.17 mark, the Nifty futures as well have now crashed below the 56.50 level. The premium shrunk, and currency, that really has been the key monitorable after nudging that 61.50 mark in trade. Out of time then from Nikunj and me. It's a goodbye on the show.